morning, my friends. It's a Saturday and it's a time to make another Forex market review as usually. So this one will be for the following week, Monday 8 April till the Friday April 12th. So let's check first the news which could be used for the market manipulation by the market makers. So Monday, Tuesday there is nothing, so I think the market still could continue in the trends which are set up, and then the Wednesday it will be very important. Overall there is a GDP from the Britain, and we will have the Euro items as the ECB press conference, monetary policy statement, and as well we're gonna have FOMC meeting and the CPI and this, and the Thursday we're gonna have an OPEC meeting which gonna affect the oil and the Canadian dollar, NOK and SEK, Swedish crown. So these currencies which are affected by the oil prices, and the Thursday as well the USD PMI. So there's not gonna be too much news, but the Wednesday will be very important, and I think that the market will be preparing for that. So the market makers will be moving the prices to the strategic levels. As you all know, I'm using the COT reports for my trading, and a lot of people are asking me what and how and etc. how I'm using it, what does that means, and this. So I have prepared some just small commentary which is necessary to know when we trading or analyzing the commercials and non-commercials data. As you know, my tabs it always have two sides. One is non-commercials and second is commercials. So I'm comparing these two sides. There is of course another third subject which is the non-reportable, but these ones they doesn't affect market too much, so I'm not watching these. So let's look at it, who is who. Let's start with the non-commercials. So this is a list of the large professional traders such as hedge funds, commodity trading advisors, commodity pool operators, and well-capitalized individuals and locals of the exchange floors. It's the subjects which has tradings big contracts. For example, in the currencies it's 400 contracts the minimum. So then they have to report their positions, and these subject non-commercials, this group tends to be trading trading with the trends, and they especially trading for the speculative gains. So the non-commercials, which is mostly my left side, this is the speculators. This side is trading for the speculations. And this is important as well. So these groups tend to be trend following by the nature, and of course do well when the market is in the strong trend. But a big turning points, however, they tend to get caught heavily net long at the market tops and heavily net short at the market bottoms. This is very true. So these ones are the side who is trying to make the money on the market. On the other side we have the commercials, which is always on my tabs, the right side. So these ones are the hedgers, and these ones doesn't trade for the profit. They just want to keep their the value of the currency. I will explain it. I will read this explanation as well. So these are the big businesses that are that use the currency futures to hedge their cash positions, and they're not speculating. Yeah, so in this group is the banks, institutions, multinational conglomerates, corporations as the Coca-Cola, Adidas, or whatever, Apple, or any of these big ones. So because they are not hedging, they doesn't have to always be right, you know. So they're not looking for the best entries, and they're not looking to make a profit. So they always just keep the price in the hedge, and they need to run it. How to explain it? In the way that they just try to keep the value of the instrument for the fair price for them, so they can use it for their businesses. Yes, as you can read in this, so you can pause the video and you can read what is explained here. And the last subject is these non-reportables, and as I said, this is group which is undercapitalized, and they respond to its emotions and the worst trading records. So these ones I'm not watching at all, but I suggest you to pause the video and read about these two groups which are affecting the market. So as I said, the non-commercials are the speculators, and these ones is the hedgers and the big companies, which are mostly the most profitable. These ones are trading for the profits. These ones are mostly do the hedging. But in the non-commercials as well, we have the banks, and banks could be the commercials and as well the non-commercials, because in the non-commercials it's the investment banks, yes, and as the commercials it could be the banks which just need to do the currency exchanges and other things. Okay, so it was just for the beginning, and now let's get back to the charts and see what do we have. So we will start with the dollar as usually. I'm not gonna go through all the time frames because I explained this in the last videos, and we will look at it. We will look deeply in the daily and 4 hours time frame. So on the daily, with the dollar index, the price is moving up in this range. Right now I'm saying the range because we don't have a new high yet. But what happened on the Friday, we had the non-farm payrolls, which is actually the most boring news release, I must say, in the last more years. And what is happening here? So we saw this break of this trend line, and many people started to short. This created this new supply zone. So in here it was looking very good for the shorts. However, the wave 5 still wasn't finished, and this happened. So they just removed this supply zone, which created a new potential zone for the longs. And as I said, that we're gonna have this FOMC meeting on the Wednesday. So what I'm expecting that if the dollar should make any corrective move, which I'm expecting that it could happen on the daily time frame, that the price will come back down here and then it will continue up. So what do I think is that we will see during the Monday, Tuesday, the price will be moving up towards to this supply zone on the 4 hours, and then on the FOMC meeting they will take it down into this demand zone. This is the scenario. Other thing what could happen is that the price will start to drop down, and then it could go up on the FOMC. So this is two possible scenarios. I will be waiting for that, but what do I think is that we will open with some gap and the price still will continue higher, and from there I think we will see the correction after the FOMC and this Euro ECB meeting on the Wednesday. If you look to COT data, what do we see here is that since the last report on the 26th March, we had the 36k longs, which was in this candle where was reported, and the longs was risen to 44. So it's almost like 8k longs up, and they rise as well the 4k shorts. So in this period between these two candles, we can see the rise of the longs, And as well we can see a bit rise of the shorts. We of course don't have data for these last 3 candles, but if we are seeing that they are rising as well, the shorts, so the probably this correction is in the play. Now is the question if it's gonna be right now or if it's gonna be from somewhere else, but the 4 hours charts can tell us that it would be most likely in here, because with the technical analysis as well, if we look at it like this, we can see the break of this trend line. So here is the break, and now potentially we will see the retest and drop down. So this is what I'm expecting for the dollar. Let's move to the next one, and it's a gold. So the gold has dropped down from this last week, from this supply zone, which is the trade which I was expected for the long time, and our trades are now running around these 200 pips. So we did some partial close, and what is happening right now, so we can see that the price was in this range in this range on the 4 hours chart for the whole week. Nothing much is happening, you know, some move ups, moves down, some stop bounce like this, and as well they removed here was the supply demand zone, sorry, here was this demand zone, it was removed. So they actually showing us that they want to move down, they clearing the way down. However, as this supply zone demand zone, sorry, was removed, it created new supply zone, and this supply zone was removed by this accumulation. So it created a new demand which is now retested, and we are below this trend line. So question is, what is going on now? Of course the price still could start to drop, or it could make the reversal and then drop down. If I look to CFTC data, it gives me more clue what is going on, because let's check this. In the 1, 2, 3, 4, like 8 weeks ago, here on the top we can see that the banks closed from the 270k longs to 255, and right now while we are here we are just 194. It's a very big change. And what is happening actually here, what was this last week, if you remember, some people asked me why I believe in the shorts. When we saw this last week, we saw that 217 and then 226. So it's like they adding actually longs. So what that means, why they did it? They added longs just to move the price up. We must look always to the big picture. So with this I want to answer the question. So if we see, we cannot just compare, and this is the biggest mistake in the COT analysis, because the people, they look to the charts and they see, oh, we have 203, next week 215, okay, 217, 226. So they just expecting the price to move up. It can work for you sometimes, because you can see the rise in the longs, so it could work for you for a while. But then you will see 0.26, so you still keep your longs, and then boom, quickly they take you out, you know. So you must look to the whole picture. Of course we see the rise in the longs from 2017 to 26, but it was to move the price into the supply zone, which is the strong level. This is the level which absorbed the zone here. Look at this strong departure. So the dynamic of the markets tells me that they just rising the longs to prepare these shorts, and we can see as well how they've been adding the shorts. Now we can see less numbers in the shorts, because there was probably some profit taking. And I think we will see probably some correction up. and where it's gonna be, I think it could be into this level, which is 1307, which is somewhere here on this daily chart. So my positions, our positions are here, the shorts. So we don't close the shorts yet. We actually have partial hedge, and we will take profit here, and we have another sell limits around these levels, and I'm expecting the price still dropping down. So because as well with the strong dollar and the commodities are overall dropping. So I heard in some groups like something like gold to the moon. No way, forget it, my friends, no way, because this is my fundamentals, and this is what telling me what is going on. And forget any rumors or whatever anyone says. This is what has the power, and this is what is happening and what is reflecting what is going on the charts. Next one is the euro. So the euro, I must say that it's a big downtrend. Of course, there could be some correction, but I don't suggest anyone to take a trades on the euro. The first reason is that if you go long, you have the big negative swap. So if your position will be just moving here for this couple, if you take long here, you've been 1, 2, 3, 4, 5, 6 days in the positions. Market didn't move anywhere, and you are paying the swaps. It's even better to take a short and wait with the shorts and be paid for that. So right now on the euro, what's happening? We have downtrends on the monthly, weekly, and daily as well is the downtrend, and we had this this fake out on the last FOMC, and now the price is moving down, and it came to this tested zone, and it's moving in the range here. On the 4 hours it looks like this. So we have the break of this trend line, then the range, and from the NFP it dropped down again. So what is going on here? We just look to the data, and it will be much more clear. So from this last candle in the last week, we saw that the banks been 141k longs, and they've been 223 shorts. While the price dropped down, we can see they added even another more short. So they added from 223 to 249. So they added something like 24k shorts, and the longs still stay almost same, not big change. So I don't think we will go too much higher, and if it's not gonna be the higher than this supply zone. So what I'm expecting now, as I said, that this week we're gonna have this FOMC and the ECB bank. There will be two scenarios. So we can see that the banks are heavily short. We can see that the ratio is changing from last week. It even changed from 61 to 64 to the short side. And the other side, what is doing the other side? I said that they are hedgers, right? So if the price is going down, they are adding the longs because they want to stabilize the price. And if we look that they're rising from the 273 to 289, 86, and the shorts are they closing the shorts. So what do I believe is they believe as well that it will go more down, and the Europe economy is going very bad. But I don't care too much about the news. So what is the option right now here? Okay, we had the NFP, and on the NFP there was a strong data for the dollar. So the many people, some people they took longs, they are now in the strap. Some people they took shorts then, and they expecting the price to go down, which I think will happen. However, if we have this ECB and this FOMC this week, look what's happened here. Yeah, So we have 1, 2, and here is these many touches. So the people might thinking that the NFP gives the strong data for the dollar and the price will be dropping down. So they will probably, those who shorted here, they are okay if they lock the profit, and those who will be shorting here on these breakout where they put stop loss, they will definitely put stop losses here. And I think that we might see this reversal to take all these stop losses, because what is this stop losses? It's liquidity for the bank. So if they will come back into these prices, where is this stop loss cluster, they will definitely take the advantage of the filling the orders in here. Meanwhile, they will fuck up all these brokers. So watch this. If I put this one and I will share it to all charts, so you can see they will fill it up here, and they will exactly clean out these traders, which is, I think, very good strategy, because they will kill they will do just couple things in the one time. So I'm very bearish with the euro. However, at the moment I don't have the position, and I will be looking to short from this supply zone, and I will be shorting it heavily. Next one is the Aussie. Aussie is for me the very bearish pair. However, the price action is very, you see, it's like 3 weeks in this range, and the Aussie is not the pair which is moving the fast, so it's like very boring to trade this. So if we check the CFTC data, we can see that we are still running around these numbers like 22, 25, 25, you know, around something like that. But so the longs are still around something like nothing, yeah, nothing much is changing. But if we look to the short side, if you look to the shorts, in the past we've been 54 and we are going up and it's changing 54, 64, 68, 72, 76, 82. So what is happening in this accumulation? We sometimes see the rise of the longs, then they closed, rise again. So they every time when they add the longs, they do it to push the price higher. But every time while the price go higher, we can see that they build more short positions. So what does it tell us? This is a short bearish accumulation, and I'm definitely expecting to drop the price lower. And if we look as well into this, it's again, this is what the banks likes to do. They create this support, and it's the trap, and the people see it's bouncing, so everyone might try to see we will go up because this is the strong support, but it's exactly the opposite. As many times it bounces, it means more stop losses will appear here. When the more stop losses is there, more liquidity, more money for the banks, and they will just smash it down in the following I don't want to say days, but maybe the weeks, and this is gonna happen. And my target, I still believe that this one will go very deep down, and my target is around the 0.65. I think we could go down here to the 0.65 levels on the Aussie. So this is, here you can see how the COT can help us to decode what is going on here. Of course, it's not much for the intraday trading, and if you look to the commercials, yeah, they're not adding too much shorts. They even closing the shorts. You can see that they closing the shorts position. They are reducing the shorts positions. Why they do it? because they don't believe that the price will go up, so they don't need to hedge it. But what is happening? They're building the longs positions, so they expect the price to drop down, so they want to stabilize it around some levels here, so that's why they're building longs. So you see that how this can give us the confluences, or how this can help us to decode about what they're doing. And if you look at it on the 4 hours chart, it looks like this. For me, I don't like to take a short from this because we have just these stupid bounces. I think we will see something like move up here and then down. Why would this happen? Because those who shorted here and might here, it's the same the trap as I draw here, we have it here. So I think this could be cleared out and then price could be taken down. So this zone is very beautiful, but it's too high, so I don't know yet how I will enter my trade. I'm actually having one trade which we entered here on the first, or actually here on this first touch of this supply zone, and then since then we are in this range. I actually have already one trade, and I will definitely want to add more if the price go above these levels, because I'm expecting big drop down here. Okay, so this is too much for the Aussie. Let's move to the next one. So this is the pound. Pound is very interesting for me now, and it's under the big pressure and let's say the influence and manipulation because of this Brexit stuff which is going on. And I was looking at this chart and I was trying to understand what is going on here, and I will try to explain right now. I must start with the monthly. So on the monthly we had this downtrend which was broken up, then the price moved down into the demand zone which was retested. However, it means that the rest of the orders which was here filled and they changed the trend. Here is the accumulation, where was this change of this trend. So once the price came back down, they filled the rest of the orders and start to move the price up. And what is going on here, we can see that on the weekly it means already the trend change, because we have the new high, lower high and higher highs. So I can draw the trend line, and here is one nice zone. Here is this order block which caused the removal of this zone. So how it was done? So price moved up into the zone, they didn't have enough the power to break it, and then they moved down, accumulated more power here, and then they move it up. So right now the price is moving above these zones, so I think that we will see this this fake out. But let me explain it more clear. Let's look at the daily as well. We have, of course, if the on the weekly is uptrend, we have the we had the uptrend on the daily as well. So this is the uptrend, and now we are in this range, and this demand zone is holding the price above. And as well we can see what is happening here. We can see how the nice trap is being set here. Again, as usual, we have 1, 2, 3, 4 touches. So the traders start to think, okay, it's a strong level, we will go up. And they are actually right, because the price will definitely go up. Why do I think that is? If we look to this banks positions, what they reported, we can see that they they rise the longs positions. They still are growing the longs positions, and we can see that we are changing our exposure from the 76% shorts. We are now just 55, and the longs are growing. So what do we see as well is that okay, they added some shorts as well, and now I will explain why I think they adding these shorts and as well they adding the longs. So we can see that the price is now moving in this range, and we all expect it to move up, but it's not. I don't advise to enter yet, because as I said, look, on the weekly we have this zone. Where is the rest of the orders which wasn't filled while they removed this zone? So I expect the price drop down. On the daily, we are now, the banks are now filling the orders from this order block, but below we have the one new one, and one better one, which I mean the order block which could make for them the much better entry price, for the much better average entry price. And as well, if we look on the 4 hours chart, we had actually this uptrend, right? Then the uptrend was broken, then we had this downtrend. But the thing is that I have all these trend lines, but the thing is that this was the downtrend, alright, because it made a new lower low, and this was the uptrend because it made new higher high. But since then I saw on many charts of some people these trend lines, but it's wrong actually, because we are not in the trend at the moment. We are in the range until these highs and lows are broken. And what is happening here, I think that we will see this break, and a lot of traders will enter the shorts. So what's gonna happen? As we are ranging here, and some people are already in the longs, so they put stop loss definitely below these, because we see again these ones, that the price is bouncing from the support. So while they will drop the price down, they will hunt these stop losses, and as well the breakout traders will enter their shorts, and this is where they will remove the price. Because what I was thinking, how is all this done? As well, what do I see here is this, look, they just need to finish this by 5. And it's as well, if we put the Fibo, I don't use the Fibo and this too much, but I put it as a confluences. So okay, I must do it on the other side. It's gonna be 127, right? It's here, so they will probably hunt it here. And right now, look at this. So if I put this line, and I will sync it to all charts, and now we will look to all time frames. So this is our line, and now check it on the daily. So simply they will stop hunts everything below this, and look at the weekly. Exactly when it drops down here, they will fill up all their orders. So I think there will be some panic created, and some fake move during these news, which we're gonna have the next week. It could be used on this FOMC and this, but definitely I will be looking for the longs below down here. I don't think I don't think this could go too much lower, because this demand zone is the strong, as well the weekly zone, and when we have weekly, daily, 4 hour zones, will be perfect. And yeah, So this is for me for the weekly, for the pound. The next one is going to be Kiwi. Kiwi is ranging a lot similar as the pound, and I don't like this pair too much right now. So let's look what is going on here. So, and I think I will start straight away with the COT data, because check that. We have seen that since the last 2 weeks ago they raised the longs from 17 to 22. So it was from here, from here to here. And again, this answered the question why I'm bearish while they rising the longs, because they as well rise the shorts and even more, and they raised it into the supply zone, which was this zone before, which was more highlighted than now. So then the price dropped down, and we can see that the longs was closed, and the shorts they didn't close too much shorts, so it's bearish, right? And this is what I'm expecting here. What is going on the 4 hours chart is this. We are having this drop down, and right now again on the NFP many people was already short here, because they buy longs, because they buying double bottom, which I think is not so clever thing. We must look always left, and here you can see this this swing low. Here we can see this swing low, and of course what is below this swing low? Stop losses. So they cleared them out, and I think these ones will be taken out as well. So perfectly in here the buy limit will be very good for the retracement in at least into this supply zone, or maybe here. And as I think this could happen in the following week on the FOMC, or maybe we can, as what I expect even more is this. A lot of people they always try to enter, you know, on the low, and what I think that if we have this strong downtrend, the market will maybe open with some gap. So I already have my buy limits, and that I'm gonna buy as well. It's gonna finish these wave 5, 1, 2, 3, 4, 5, and we will see the break, and bam bam bam, and let's continue like this. So I think we're gonna see some short-term reversal with the dollar, and it can affect this pair as well. So this is the USD CAD. USD CAD is in the strong uptrend, and this pair is gonna be affected next week too much, because the OPEC and of course and the dollar stuff. So what could we see here is that we will see some reaction in this zone on the 4 hours, and on the daily I think that this zone, it's that 4 hour zone, this one could bring the price down, and this zone is still beautiful for the longs. So unfortunately I'm not in the long position right now, and I don't want to take a trade from here. What more I would be looking for is the short. Well, I'm not so, this is not so clear for me at the moment. If I look to the data, I can see that the banks are still adding the longs pretty nicely. They are now 68k, and they rise the shorts as well, and the other side is rising the longs. So this rising the shorts, so they're expecting the price to go up. However, will the market continue from here like this, or if it will, or will it drop? Will it drop down first and then up? I don't know yet. We will see. I'm not. I don't have any clear view at the moment. So for me, maybe just some some retracement trade from this zone with the stop loss above entry and take profit here. That could work. However, not any big targets yet, because I closed my long which I had here, unfortunately, and now it's too late for me to enter. And if the price retraces here, then they start to move somehow, and they start to build the trap again, and then they will break it. So this is not good for me to trade. I want to enter only from the fresh zone, so this one's gonna be good if that happened. The next one is the franc. Franc is doing own stuff right now. On the daily, we still have this uptrend, and we have removed these two zones. This zone is touched right now, and so if the price comes into the supply zone, I will be looking for the short. If it comes to the demand zone first, I will be looking for the longs. On the 4 hours, we have this broken trend line. And price is moving up. However, the dynamic of this move up doesn't say that it's too strong, because I don't see too much strong bullish impulses. So I think we will see this retracement first and the stop hunts of these stops possible. If we check the data, we can see that nothing much is happening. Still, it's bullish, but they are just, it's not big change, it's just 900 change, you see, so nothing much is happening here. This pair is not any attractive right now for me for the trading. This is the USD JPY, and this one is a pretty tricky one, because I'm still expecting this one to drop. However, the strong dollar is a bit against me. So I think on the weekly, once the price come into this zone, we will see the proper drop. On the daily, the price is in the zone and it's testing this, so I think we could see at least the retest. What could happen here is this. Actually, they could remove this supply zone and then retrace down into this potential demand zone, which will be confirmed after the removal of this supply zone. So on the 4 hours chart, we could see possibly the break from here, because it's the where it is gonna be broken and then move down into that zone, which is this one here. If we look to the data, we can see that the banks still adding the longs, but they as well a little bit building the shorts. However, not so much as they had before. So this one, I don't take much trades on the JPY pairs at the moment, and I will be more interested once we are visit these levels. From there, I think we will see the big drop. So this is the pairs. The last one which I wanted to show is the US oil, not this one, sorry, this one. Okay, so this one is which I wanted to point it on as well, because we're gonna have this OPEC on the Thursday, and here is what I see on the oil. So we had this trend on the monthly, and it was in the last week when we saw this huge drop on the oil, which created this supply zone once they broke this trend line. And we are now getting close into this zone again, and you can see it on the weekly as well. We had this downtrend, which is this impulse, so on the weekly it was the downtrend, and now we are nicely moving up, removing this supply zone, created new demand, and here is that potential supply zone for the shorts. On the daily it looks like this. So we are in the uptrend and we have this new potential demand zone for the long. So if the price retraces down here, the long will be nice. If the price comes up into the 66 or 67 and 68, these levels which are in confluence on the oil charts, there I will be interested to take a shorts, because I think it's gonna be, it could take these couple days, but it could comes there, or maybe the price could be, you know, somehow, and on when the OPEC meeting or the FOMC, they will just move it up, fill up the prices, and then they start to drop. So the sell limit in here will be very nice, nicely filled. And if you look to the data, we can see they very bullish. They very bullish. They moving the price up. They even adding the longs, still adding, and they closing their shorts positions, which is a beautiful uptrend. However, the numbers are right now around the 90%, and this is when the reversal are slowly coming. So I think in here it could be very nice for the shorts opportunities. Okay, so this is it from me, my friends. Visit my Telegram channel on my website, and then you just click to the join our Telegram channel and you will be inside. If you want to join my premium membership, you just donate one-time payment, and you will be added to the VIP premium channel, where I post the signals and more deeper analysis than in the free channel. This is it. Enjoy the weekend and bye bye.